Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Great news, we've got a sponsor. This show is now brought to you by Miles Franklin. And when it comes to protecting your wealth, you know there's nothing better than gold and silver. That's what I'm buying. I hope you're doing the same. And once you make the decision to buy gold and silver, there's no better place than Miles Franklin. Look, they've been in business 22 years. And the reason I'm a customer is because when you buy, they ship. Go to milesfranklin.com or call them at 800-822-8080 to get a free quote. 1490 WGCH, this is Carrie Lutz. You're listening to the Financial Survival Network. These markets are tumultuous to say the least. But if you've been in this business a long time, if you understand the fundamentals, and if you have the right discipline, this is a golden opportunity, no pun intended. And with me now is Julian D.W. Phillips of goldforecaster.com and Silver Forecaster. He's been in these markets 40 plus years. He gets it, and he can help you stay out of harm's way. Julian, welcome back to the Financial Survival Network.
It's a pleasure to be here.
I like talking to people who remember the last bull and bear market in metals, because those who don't learn from history are always condemned to repeat it. And if it's one thing we learn, human beings don't learn from history. So you've been in this, you started out in, I guess we call it foreign exchange, you called it foreign control. Tell us about your first foray into the financial markets.
Well, I joined the London Stock Exchange in 1971, and it was the same time that the dollar was floated and gold was cut off. The gold window was closed. Well, the impact in London was an introduction of exchange control to prevent capital fleeing from England. And I was in training in the back office. And my boss came down the corridor and asked the office manager, who does he think is most likely candidate to move up to the front office and help with exchange control and foreign exchange? And I was pointed out, and he asked me, well, Julian, do you know anything about the foreign exchange and exchange control? I said, well, my mother lives in Spain. He said, that's good enough, up to the front office. And he then thrust into my hands a copy of the Bank of England regulations and told me I had 2 weeks in which to learn all about it. And so I was a little horrified, but I started reading. And 3 days later, he came back to me and said, sorry, Julian, I can't give you 2 weeks. You're on now. So I started dealing, and I didn't deal very well. I only dealt one side of the formula. And as a result, in the first week, I lost £11,000. At the end of the week, he came up to me and he said, Julian, we're holding a position which you're not allowed to hold of $400,000. And I'm in trouble holding it over the weekend, but I will, provided we do okay. And he said, I'll make you a deal. If we make money on it, I'll give you a bottle of champagne. If we don't, I'm going to fire you. Well, over the weekend, the position made $2,000, and he gave me a bottle of champagne. In the next week, I made the $2,000 back plus another $11,000. But this was a common picture in London, and that's how I started my career in gold and foreign exchange. And after that, I was the only person who understood foreign exchange and gold, and was a writer for a London currency magazine at the time. At that point, I started to make a lot of money for the firm and really started to study the subject, but from a foreign currency angle. And in those days, the gold price moved from those very low levels of $42 an ounce, almost on a mathematical progression, up to $90, back to $60, up to $120, back down to 90, up to 180, and so on. And that was the beginning of its road to 850. So that was the start of my professional gold life.
All right. And comparing today to back in 71, because obviously we have no gold backing, and yet we have kind of an implied gold backing that's always being messed around with by the powers that be. What lessons can you learn from the run-up in the 70s as far as what we're encountering now?
All right, well, I see those days as the beginning of a 40-year experiment with unbacked currencies. It was a time when governments had to discredit gold. And Volcker came in and smacked down inflation by taking interest rates up to the 25-26%. At the time, I was working for Chase Manhattan in Johannesburg, and it was quite a remarkable picture what was going on. After that, we saw central banks threatening to sell their gold, and some of them doing so, and accelerating the gold supply by loaning gold out to gold producers, who did a beautiful deal of hedging their sales, selling gold all the way down with the contango in their back pocket. That's the interest over the period of their hedges, as well as the gold price in their back pocket. Well, that was great until the Washington Agreement in the year 1999, at which time they said they'd limit gold sale. European central banks said they would limit their sales. Well, that held fine while they were selling through to the year 2005, at which point the experiment in currencies started to falter quite badly. And that's when the gold price started to take off. Well, the big stumble of the currency markets came with the credit crunch in 2007, when everybody could see that this was very much a matter of Danny Kaye's song, "The King is as naked as the day that he was born." Well, so currencies stood in the same place. And the market started to say, well, we should have some gold in our back pocket. And we saw central banks slowing down their sales until they came to a dead halt in 2009. And then suddenly America and the developed world were no longer the top dogs. We saw China and India moving very heavily into the market. And this time, the important thing about China and India moving in is they were not part of the team of nations that squashed gold. They love gold, and their love of gold has increased over the years. So now you have a big dent in this currency experiment. It's still holding because the dollar is the only way you can buy oil. But that doesn't look as strong as it used to as well. And if the king is seen in the altogether properly, then we're talking about gold having to come back in. Now, people will think that gold is not back in the monetary system, but it is, because we saw the BIS lending currencies against gold to the extent of about $500 the year before last. These were reversed, but there's no doubt gold has been used as collateral to facilitate loans and to lower the interest rates charged on them. And we've just had Greece receive its bailout package, in which it's had to pledge its 111 tons of gold as collateral as well. So now gold is very firmly back in the monetary system, but as collateral, not as a sale value. And one of the biggest lessons you can learn from this 40-year experiment, going back to 71, when gold was linked to government pay, an exchange of dollars, euro dollars for gold under President de Gaulle, etc. The biggest lesson you can learn is currencies must have a stable value, irrespective of economic conditions, and they don't. Currencies are being used to stimulate growth. They're being used, inverted commas, to attain a sort of price stability. But currencies, if they're to be money, have to represent a stable value that moves with the state of the economy and debt and risk. So the gold price is acting now as a sort of thermometer, a financial thermometer on the value of currencies, the value of economies, and general state of the global economy. And as such, it's risen quite firmly and is very firmly in the minds of the emerging nations who are not going to accept any pressure from the US in terms of you will have dollars. And that puts on the scene a time when the governments the East say, sorry, we're not going to depend upon the US dollar. It's an empire in decline, and we will not permit you to dictate to us what is and what is not in terms of currencies. We will establish a yuan, and to the extent that we price our goods in yuan as opposed to dollars, so the dollar will become an excessive currency and have to return home, where it'll cause a decline in the foreign exchange values. But gold will reflect this, and as Greenspan said quite wisely, that gold is money in extremis. So we've seen a change in the condition of the concept of gold. People today keep looking at the price of gold. But I can assure you, when push comes to shove, it's not the value of dollars against your gold that will count. It's the number of ounces you have. Yeah. And the currencies will be measured by gold and not gold by currencies.
Yeah, it'll be the weight, how much your metal weighs, that's going to count, not the arbitrary measure of how many dollars per ounce and such. I think that's a foregone conclusion. And also, there's no more Volckers out there. And I don't think the world economy could take interest rates at 5%, let alone at 25%. That would be immediate collapse, global calamity. So really, what they're doing, inflating, it's really inflate or die. They don't have any other choice, do they?
I think not. And this latest quantitative easing by suggestion that the Fed will follow lending long and borrowing short. Mm-hmm. It's a classic move that used to happen in boom times, and the banks who did it saw their balance sheet improve because as rates declined, so their book looked great with long loans and short borrowings. Mm-hmm. But that doesn't work in these conditions. And I was fascinated in this last week to see that after Hugo Chavez of Venezuela repatriated the nation's gold, how it's starting to spread, the concept. Chavez did it because he knew he would be unpopular, but he also did it because he now has got the gold at home, which he can use as collateral should he wish to do so. However, Germany, can you believe, Germany and the German public are starting to worry, where is our gold? And if they find it's in the US Fed or the Bank of England, the people are saying, well, shouldn't we have this at home? Now, if they follow that path, you can be absolutely sure that a lot less wise and less wealthy nations will follow the same path. And the consequences of that are that the question mark above whether the Bank of England and the Fed really do have gold will be answered. And I cannot see it being in the interests of either the UK or the US to see foreign national gold going home. So I think we're in for a most interesting 2012, and certainly into a rising gold price market.
Yeah, I've seen that gold. It's in the basement of the Federal Reserve in New York City on Broad Street. There's 7,000 tons of it. They won't say who it belongs to. I always wondered, what's with the secrecy? Why won't they say what country's gold is which? And now it's making total sense as the situation unwinds and we hear about the leasing and all the other nefarious things that have taken place in this market. Now the secrecy begins to be understandable, that there's real reasons they don't want to say because the numbers aren't going to add up, is what it looks like to me.
Oh, you're so right. You're so right. In fact, the gold is unallocated, which means it's pooled. So it might contain German and Swiss, and well, not Swiss, but Italian and French. Who knows whose gold is there? And the Fed has the right, because it's unallocated, to lease it, to leverage it, to do whatever it will. And if it has done that, then that gold is not theirs, despite them putting it on their books as belonging to them, as belonging to the foreign nationals. Now, if it's repatriated, then that number of 7,000 tons will quickly dwindle. And suddenly the leases Can you imagine going to the Fed and saying, "Can I have my gold back?" And they say, "Sorry, we've lent it to somebody."
Yeah, what gold? What gold is that? We don't have any gold. And the fact is that the amount of gold there has been gradually diminishing over the years because no country wants to say, no Western country, allied country wants to say, send us back all our gold right now. But they take a few hundred tons here, 50 tons there, and that's what's been going on, but it's not been talked about. So, like you said, we're really in for an interesting year where the inventory, the true inventory of gold around the world might very well come out and become general knowledge, which will be a whole new leap in global financial transparency, won't it?
Oh, absolutely. And I can see countries like Germany having a major sense of humor failure when they find that that there's not that much there. But it's going to be a bit like musical chairs. You know, the gold that is absent will be the gold of the last person to claim it.
It'll probably be the U.S. because that's just the way we work things here. But but yeah, it's a whole scheme unwinding. And then if that happens, if that comes to pass, and supposedly Venezuela has not gotten back all their gold, they've gotten about 50 tons back, and they aren't getting the rest. It's not being shipped, but that's an untold story that I'm trying to find out more about. But the fact is, when this whole thing unfolds, you could see wars over this because countries have gone to war for a lot less than having their gold, their crown jewels stolen out from underneath their noses.
Absolutely, and you can imagine the ramifications. If the United States has the right to freeze Iranian gold deals and finances, then if this country or that country finds that its gold is not there, what's to stop them seizing American assets inside their country?
Yeah, there's a lot of Apple computers could be up for grabs. A lot of Apple stores.
Well, there is only one answer to that, and that is that in 1933, when gold was money, the only way they could bump up the money supply to get out of the Depression was to seize gold and then devalue the dollar against gold by 75%. Now, if there is a shortfall in gold in the vaults, then that remains one of the options they have in front of them. And it's therefore not beyond reason that that act of seizure should happen again.
So you
think it's a big worry because many people are holding gold in the belief that they're secure. And some of them are even holding it overseas in some very professional depositories. However, what they seem to have overlooked is that if the Fed should knock on their door and say, "Would you mind repatriating your gold? We know you've got it overseas, and we're making it a law that you do so." Well, then there goes their security. So I've actually constructed something along with colleagues that will protect against such, at least we believe it will give full protection against such seizures. And we're very shortly to launch it. It's two companies, one called Stockbridge Management Alliance, and the other is the Ultimate Gold Trust. And we've structured it in what we believe is a clever way so that when the attempt to seize that gold happens, citizens will be placed in a position where they still have the right to sell it and therefore avoid any particularly unpleasant attacks, but they will not have the right to repatriate it, but will remain the beneficial owners of it. So we believe we put in place sufficiently good blocks to prevent repatriation of gold. And therefore, people will be able to continue to hold gold under a confiscation order. And we think it's a bit revolutionary. But we'll be releasing details of that in the newsletter, www.goldforecaster.com, very shortly, hopefully in the next week. And anybody who's got an inquiry should send an email to that website, and we will send them the information quite happily.
Sounds pretty cool. I mean, in one of my past incarnations, I was an attorney doing commercial litigation, corporate litigation, and we would have debtors who had assets stashed overseas, and we knew where they were. And sometimes we would get these guys on contempt because the court would order them to repatriate, throw them in jail for a period of time for violating the court's order. But when push came to shove, if the debtor no longer was able to actually repatriate the asset, to bring it back, like it was an insurance contract or a trust of which under another country's law he had no power to do so, they had to let the guy go eventually. So I don't know if that part of the law is going to change or not, but if you are worried about stashing your assets overseas and you're worried about confiscation, and not so much confiscation, but being ordered to repatriate and then liquidate, then what Julian's talking about here could really help you effectively shield yourself from repatriation orders. So
absolutely, and I'm happy to say, Kerry, that this is the first time I've announced this particular story.
It's pretty exciting, Julian. After it's been out there for a while, we'll talk again because I want to get the details on it, want to do a little research. So if you're looking to protect your assets from potential government seizure or forced repatriation, this could be the option that you're looking for. Julian, thanks again for coming on. We'll talk to you in a month or so, and we're watching these markets with childlike fascination.
Good. Well, it's a pleasure to chat to you, and I look forward to chatting to you again.
All right. You be well.
Thank you.